All right, George, I know you've been interested in the IMF and the World Bank and have not been very happy with the way the IMF has performed, and maybe also the World Bank. Could you let me know a little bit about what your views are on that?
The IMF was created to monitor the gold-related fixed-rate exchange rate system that was put in place at the end of World War II. And it had certain duties with respect to that. It really wasn't a fixed-rate system. The U.S. rate was held and everybody sort of moved their currencies around us, much to our disadvantage, I think. Not very symmetrical at all. But at any rate, that was the IMF's job. When we closed the gold window in 1971, so people couldn't exchange their dollars for gold at $35 an ounce, that system, the Bretton Woods system, basically ended. And we went into the present sort of managed floating system. And so it seemed to me that the IMF's role would be very limited at best. Instead, the IMF proceeded to invent new jobs for itself. And it gradually sort of moved over, almost replicating the World Bank, making loans and encouraging economic development of one thing and another. And so it seemed to me it had lost its way. So in an article I co-authored with Bill Simon, who was my successor as Secretary of the Treasury, and Walt Wriston, who gave us a lot of credibility because he was certainly one of the outstanding, if not the outstanding private banker in that period, calling for its abolition. And I think it stirred people up a lot. And I think it brought a sense of the need for IMF reforms. And there was a commission, Meltzer Commission, that had some good suggestions, I thought. But it's an example of a bureaucracy that started for a reason. It has money, and so it just keeps going, whether the original reason was so or not. I regret something I might have been able to do back in 1972 and 3 when I was Secretary of the Treasury. We developed an approach to reform of the exchange rate system. Right. I might say an approach that was ingenious, and the basic idea I got from Milton Friedman. But we produced a flexible exchange rate system in the clothing of a par value system. And at that point, I think it might have been to get the IMF to make a big change. Because it always seemed to me, and I think this today, it could be benefited if we did this today, the IMF should be thought of as aligned with the World Trade Organization.
Yeah.
Because the exchange rate system is basically the other side of the coin of the trading rules. Instead of having a World Bank IMF meeting in the sense of these things are the same, they're the same only they each have a bunch of money, you move the IMF with the World Trade Organization and let the World Bank have its meeting with the other development banks around the world and put the IMF in a spot where it has a clearer mission. So I have been very critical. Yeah, you're right.
If we're starting afresh now, would there be any role at all for an organization like the IMF, even modified, or would we be better off just not having an IMF? And we have the World Trade Organization. What role can the IMF add to what the World Trade Organization does? If we could start afresh, which we're not doing, but I suppose we could.
It could add the dimension of watching the use of the exchange rate system to distort what might be normal trading patterns. And you remember the beggar my neighbor policies that many countries followed in the 1930s. They were part of the protectionist atmosphere. So I think that's something that needs to be watched over, and I suppose the IMF could do that, but it does need all that money to do that.
Right. Now, what about the World Bank? You haven't, as far as I know, written a similar article on the World Bank. Do they have a role in the sort of modern global capital markets and developing economy atmosphere? I mean, it seems to me it's questionable, but
I think so. But I think if it has a role, its role is with the very poor, the low-income per capita countries. And it seems to me the approach that's now been put in effect by President Bush, and I might say John Taylor, our friend who was here at Hoover, had a lot to do with this, in saying we should judge not by how much money you put in, but rather what kind of results you get out. It sounds perfectly sensible, and it's amazing that that's considered revolutionary. But anyway, do that and say that here is some low-income per capita country, and you just know that if the government is terrible and the policies are terrible, there's no point in putting money in for economic development. It just won't be of any use at all. But probably there are some occasions where you can see that it could be helpful, and probably it's a good idea to have an organization that operates that way. But the bank still makes big loans to China. China has reserves going out of sight, and they're making loans. Why? Because they find they can get a return on the loans. They get the money. Is that what the World Bank is about? The original idea is that it was the International Bank for Reconstruction and Development, and the reconstruction was Europe. And the notion was that the private banking world couldn't generate the kind of funds necessary, and so you had to have the World Bank. Well, now the private investing funds are huge, so you don't need to have that supplement.
Yeah. Now, what about the notion that when you have an organization like the World Bank, even in poorer countries, if they come in, particularly if they put any resources in, and that's that they'll delay reform rather than accelerate reform, because if you're getting resources from elsewhere, you don't. The pressure to reform is weaker. How can one control that tension between aid delaying reform and sort of using aid judiciously to sort of speed up reform?
Well, I think it's a matter of using good judgment about when the aid can really help. And it seems to me a big element of the judgment is deciding that the government you're dealing with is something that can handle it properly. Also, I'm impressed with something different, and I don't know that whether the World Bank has any role in this, but the micro-lending is kind of interesting, I think.
Oh, yeah.
Organizations that set themselves up to loan small amounts of money to people who want to start a small business somewhere. And I described this to my friend Paul Wolfowitz, who now has the job of heading the World Bank, as this is development from the bottom up instead of development from the top down, which always has question marks, I think.
And it was started privately. I mean,
and started privately.
And I think the private ones have been the most successful.